GameStop, the video game retailer that was nearly bankrupt in 2020, just made a $47 billion bid to buy eBay, one of the world's largest e-commerce platforms. While GameStop is worth $11 billion, eBay is worth $47 billion. So you might be thinking, how is a company worth $11 billion offering $47 billion to buy another company? And why did GameStop CEO Ryan Cohen go viral for giving the most awkward financial interview in recent memory when he couldn't explain where the money's coming from? Let me break down what's exactly happening. Welcome back to KP Money Talks, and today we're unpacking the wildest corporate takeover bid of 2026, GameStop's hostile offer to acquire eBay for $125 per share. I'm going to explain how this is even possible, why Wall Street thinks it's insane, what it means for Canadian investors holding their stock, and whether this has any chance of actually succeeding. Hit the subscribe button for business and financial analysis that makes sense. Let's dive in. On May 3rd, 2026, GameStop submitted a non-bidding proposal to acquire all of eBay's outstanding common stock at $125 per share. Here are the numbers. eBay's stock was trading around $85.62 on February 4th before GameStop started accumulating a position. The $125 offer represents a 46% premium to that price. The total deal value is approximately $47 billion for all eBay shares, while GameStop's current market cap is roughly $11 billion. And here's how the deal is structured. Shareholders would receive $62.50 in cash per share plus $62.50 worth of GameStop stock per eBay share they own. eBay shareholders can elect whether they want more cash, more stock, or the 50-50 mix, all subject to pro rata allocations to keep the overall deal at 50-50. GameStop has already accumulated a 5% economic stake in eBay though. Two things: direct ownership of common stocks and derivatives. They filed a Schedule 13D disclosure on May 4th, signaling aggressive shareholder intent. A 13D filing is what activists and hostile bidders use when they plan to push for changes. What really made this story explode wasn't the bid itself. It was Ryan Cohen's disastrous appearance on CNBC's Squawk Hawk Box on May 4th. Here's the exchange that went viral. Andrew Sorkin and Becky Quick repeatedly asked Cohen a straightforward question: where is the money coming from? Cohen's response: it's half cash, half stock. Sorkin said, I understand that, but the math doesn't get you to the price you're offering. You're valued at $11 billion. You're offering $47 billion. Where's the rest of the money coming from? Cohen then, with a blank expression, said, I don't understand your question. And the interview became an instant meme. Social media users speculated he looked drunk, high, or exhausted. The Financial Times later described it as awkward, with Cohen responding with a blank expression and clipped monosyllables. And here's why this matters. The interview revealed that Wall Street had immediately suspected GameStop hasn't actually figured out how to finance this deal. The cash portion alone is roughly $23.5 billion. GameStop has nowhere near the amount on its balance sheet. So, let's be clear. GameStop doesn't currently have $23.5 billion in cash sitting around. So where would it come from? There are multiple options. Option 1, debt financing. GameStop would need to borrow tens of billions from major investment banks. Think JP Morgan, Goldman Sachs, Bank of America, providing bridge loans. The problem is, GameStop would need to convince banks that the combined GameStop and eBay entity can service the massive debt. Given GameStop's retail challenges and eBay's mature business model, that's a tough sell. Option 2, Equity financing. GameStop could issue billions in new stock to raise cash, but this would massively dilute existing GameStop shareholders, the very retail investors who propel the meme stocks saga. Option 3. Strategic partners or private equity. GameStop could bring in co-investors or private equity firms to share the financial burden, but this also dilutes control and Ryan Cohen's ownership stake. Option 4. Asset sales. The combined entity could sell off eBay divisions to raise cash and pay down acquisition debt, but this assumes the deal closes first. And here's the reality check. The Wall Street analysts have been blunt. They don't see how GameStop realistically finances this without either taking on crippling debt, massively diluting shareholders, bringing in partners who take control, or some combination of all three. As one analyst told the Financial Times, the response has ranged from skepticism to outright mockery. So if Wall Street thinks this is crazy, why is Ryan Cohen doing it? Ryan Cohen co-founded Chewy, the pet supplies retailer, and sold it for $3.35 billion in 2017. He's not a random meme stock hype man. He's built and sold a billion-dollar company before. Cohen took control of GameStop in 2021 during the meme stock frenzy, and he's been trying to transform it from a dying brick-and-mortar retailer into something else. The vision has never been entirely clear. From Cohen's perspective, acquiring eBay might make sense. 1. E-commerce infrastructure. eBay has massive e-commerce infrastructure, logistics partnership, and global reach that GameStop lacks. Number 2. Marketplace model. eBay's marketplace model could theoretically complement GameStop's retail and collectibles business. 3. Collectibles synergy. Both companies deal in collectibles. eBay has trading cards, memorabilia, vintage games. GameStop sells collectibles and Funko Pops. And number 4, diversification. This would instantly diversify GameStop away from dying physical game sales into a broader e-commerce platform. In an interview with Financial Times, Cohen said, "The more eBay fights me, the more I'm not going to take no for an answer. I'm not going away. I'm a pain in the ass." This is classic activist investor language. He's signaling that he'll launch a proxy fight, publicly pressure eBay's board, and make their lives miserable until they engage. The bottom line is that GameStop's $47 billion bid for eBay is one of the boldest or most delusional corporate moves in recent memory. Ryan Cohen can't explain where the money's coming from, Wall Street is mocking the proposal, and eBay's board is non-committal. But Cohen has a track record of surprising people, and he's not backing down. For Canadian investors, if you own eBay, enjoy their short-term pop, but don't assume the deal closes. If you own GameStop, brace for potential dilution and volatility. This story is far from over. If this breakdown helped you understand what's happening, hit that like button and subscribe.